This is Business Weekend with Edward Boyd.
Hello and welcome to Business Weekend. I'm Edward Boyd. Coming up, global markets remain highly volatile as investors react sharply to any new shred of tariff and trade policy news being released from the White House. Something as simple as a post by President Trump on Truth Social can trigger massive fluctuations in stock prices. Today we'll discuss how investors can adapt to these uncertain times with fund management specialists Junbei Liu from TenCap and Sebastian Mullins from Schroders Australia. The countdown is on until the federal election, which will be held in just 6 days. Government spending is already at record levels and both parties have pledged to increase their spending over the next 3 years. So what are the implications for our economy and interest rates? Former RBA Assistant Governor and Westpac Chief Economist Luci Ellis will explain the details.
Lock in a 25 basis point rate cut for the 20th of May. It would just be very hard for the Reserve Bank to justify holding rates when the world economy is looking, materially weaker.
And this week, the Albanese government pledged $1.2 billion to create a critical minerals strategic reserve to help shore up Australia's supply of rare earths to counterbalance China's dominance of the rare earths market. Aussie rare earths company ASM is on the program. So all that and plenty more on Business Weekend. But first, this shortened trading week has been another roller coaster for investors, economists, global trade experts and politicians. It all started with US President Donald Trump on his own platform Truth Social, calling the head of the US Federal Reserve, Jerome Powell, a major loser and demanding Mr. Powell cut interest rates immediately and suggesting he would fire him. American stock markets collapsed on the news, so Mr. Trump quickly backtracked.
I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier.
Some of the whipsawing in the US also came from the US administration talking back its stance on tariffs. The total tariffs on China was meant to be around 145%, but due to the sharp reaction from the stock market, the president is now downplaying his hardball approach.
We are going to have a fair deal with China. It's going to be fair.
Are you talking to them actively now?
Actively. Everything's active. Everybody wants to be a part of what we're doing. They know that they can't get away with it any longer, but they're still going to do fine. And we're going to have a country that you can be proud of, not a laughingstock.
And for good reason. The IMF this week dramatically scaled back its economic growth expectations around the world. Global economic output is expected to fall this year, downgraded from 3.3% down to just 2.8%. For Australia, a bit of a headache for the incumbent government, with GDP for 2025 cut from 2.1% down to 1.6%. And it's all because of the threat of the ongoing trade war.
The landscape has changed since our last World Economic Outlook update in January. We're entering a new era as the global economic system that has operated for the last 80 years is being reset. Since late January, many tariff announcements have been made, culminating on April 2nd with near universal levies from the United States and counter-responses from some trading partners. The US effective tariff rate has surged past levels reached more than 100 years ago, while tariff rates on the US have also increased. Beyond the abrupt increase in tariffs, the surge in policy uncertainty is a major driver of the economic outlook. If sustained, the increase in trade tensions and uncertainty will slow global growth.
How will the new government handle a potentially weaker economy? Both the Treasurer and Shadow Treasurer were asked about this during this week's debate.
Now, the World Economic Outlook, which was released overnight, did paint a pretty concerning picture of a world economy which is made more volatile and less certain. Already we've seen those wild fluctuations on markets, equity markets, currency markets. We've seen oil down and gold up. We've seen faith shaken in US Treasury bonds, all as a consequence of the tariff announcement out of Washington, DC.
We are facing deeply uncertain times, and the IMF has emphasised that just overnight when they've said that on current settings we can expect a resurgence of inflation, a slashing of economic growth, lower employment, higher unemployment, and a drop in commodity prices. And of course, the point about this is that over the coming years we are going to need strong economic management to get through these uncertain times.
It's going to be a challenge. Government spending is at record levels. It's helped sustain Australia's economic growth, build infrastructure and generate jobs. But it's also pushed the federal budget deeply into the red, with recent budget papers forecasting a decade of deficits. Instead of opting for restraint, both political parties have pledged to spend even more money in the coming years. So, with the federal election less than a week away, what sort of economy will the winning party inherit, and where are interest rates going? I spoke with Luci, Ellis, the chief economist at Westpac, a little earlier.
I think there's an underlying trend in Australia and around the world to expect more of government. And to be honest, I've just come back from 3 weeks talking to our customers in Europe and North America. And when I show them the graph of the fiscal position in Australia versus the fiscal position in the US and some other countries, everyone's reaction is, you guys don't have a problem. There is an issue in terms of the tax burden that those expectations require, but in terms of fiscal sustainability, Australia is in a pretty good place.
Yeah, I guess the spending has obviously kept our economy growing. It's created jobs. It's resulted in, the construction of things like roads and critical infrastructure. So it's had a lot of benefits. But whoever wins this upcoming election, will they be able to sustain that spending without raising taxes?
Fundamentally, in Australia, because our tax brackets are fixed in dollar terms, unless there's an explicit tax cut given, taxes do rise as a share of income. That's something we've been calling out for some time, and it's part of the reason why there was such a squeeze on household incomes over the last few years. And you don't see that in countries like the United States or Canada, where the tax brackets are CPI indexed, which I should point out is not something I would advocate.
Yeah, I know Peter Dutton has said he has aspirations to fix bracket creep, but there's no concrete policy from either the Coalition or from Labor around changing the tax brackets. Is that something you think needs to be addressed immediately?
I have previously advocated for escalating the tax brackets by 2.5% every year, 2.5% being the midpoint of the RBA's inflation target. And the reason you do it that way, rather than escalating by the full CPI, is that you still end up having fiscal policy lean against periods of high inflation, such as the one we've just come out of. And if you don't do that, if you don't have fiscal policy leaning against high inflation, then monetary policy's got to do all the work. And, that has a much more uneven impact on people. So, there are questions around how we should raise the revenue that governments need to provide the services that people expect, but it's part of a holistic design program.
All right, looking ahead to whoever wins this election, what sort of economy are they going to be inheriting? I note this week the IMF downgraded all of its global economic forecasts, including for Australia.
Well, Ed, we've downgraded our forecast for Australian growth in 2025 as well, albeit only by 0.3 of a percentage point, from 2.2 to 1.9%. That is still positive growth, but it is a bit soggy and it is a bit disappointing. The Australian consumer, as I mentioned before, has been squeezed by high inflation, rising taxation, and to a lesser extent, high interest rates. Lower interest rates is helping, lower inflation is helping, and the stage 3 tax cuts is helping, but we're still seeing quite weak consumption. And, we also did see a little bit of a hit to consumer confidence after the tariffs were initially announced by the Trump administration. We saw that in our Westpac Melbourne Institute consumer survey. Now, it's nothing like what's happened in the US, where consumer confidence has absolutely tanked because people are realising that they're going to be paying much higher prices because of these tariffs. This is much more of a hit to the US economy than the rest of the world. But I think all of us are facing much higher uncertainty. Every day there's a new headline coming out of the Trump administration. Are these tariffs going to stay where they are? Are they going to be cut? Is there a negotiation going on? Is there not? Is the Federal Reserve going to remain independent, or is the Trump administration going to be able to pressure it? These are all questions that are being debated both by our customers offshore and here in Australia, and they're weighing on people's confidence, and they're causing people to delay some of their investment decisions. And this is not a great outcome for the world economy.
Yeah, there is an escalating chance that the US economy falls into recession. But what about our biggest trading partner here, China, as well? They're obviously in the middle of a tit-for-tat trade war with the US. If they slow down, I think the IMF said their economic growth this year has gone from 4.6% down to 4%. If their economy deteriorates, what does it mean for us?
Well, different people have different views on the outlook for China. Our view is that the Chinese authorities will do what they need to do to still hit their 5% growth target. That's their objective. They have a lot of tools to do that. And I think the fact that the Chinese authorities haven't offered any concessions and have escalated tariffs in a tit-for-tat way with the United States tells you that the Chinese authorities think they can outlast the US on this. The US tariffs are an act of economic self-harm for the United States. And I think the Chinese think that they can outlast them.
All right, next week we get the critical quarterly CPI figures for our economy on the 30th of April. What are you expecting to see, and how's the Reserve Bank going to react to these numbers?
Well, earlier this week, I already put out my rate call. I don't think we need to wait for the CPI next week. I think we can lock in a 25 basis point reduction in interest rates on the 20th of May. I think the world has changed enough that you can lock that in. Previously, we've been in the wait for the CPI. Is it enough for the RBA to move? Has the RBA been surprised on the downside by wages growth and the labour market? And that's the game we've all been playing the last 6 or 9 months. And that's really what happened in February, that the RBA had been surprised on the downside as inflation had fallen more than they expected. And consequently, they were in a position that they could cut, but they really had no confidence that they could keep going. Well, you can put all that to one side now and lock in a 25 basis point rate cut for the 20th of May. It would just be very hard for the Reserve Bank to justify holding rates when the world economy is looking, materially weaker, not a disaster, but materially weaker, when the growth outlook for Australia is already, has been downgraded, and where, the household consumption outlook is turning out weaker than what they had previously expected, which was much stronger than many of us in the private sector had been expecting. So, it would be very hard for them to justify holding rates at the next meeting. So we think you can lock in that 25 basis point decline.
All right, so lock in 25 basis points for the 20th of May, but what about over the coming months as well? Are you expecting the Reserve Bank to move again with the cash rate towards the end of this year?
We haven't changed our base case that there are 2 further cuts after May, but that is going to be very much dependent on what happens in the world economy. We've had so much uncertainty coming out of the US, so many other seismic shifts like the pivot in Europe with the constitutional change in Germany to enable more defence spending. There are some really big seismic shifts going on in the global economy that Australia is going to be buffeted around by. So at the moment, we are still expecting 2 more cuts, but we think the risks have completely flipped. Previously, the RBA was so worried about inflation not getting all the way back to 2.5% versus the 2.7% they had in their forecasts in February. They were so worried about that they weren't willing to commit to cutting rates further at all. The risks were they were going to go slower than we had thought. But I think now with the global economy being as it is and all the turmoil that we're seeing in global markets, I think we can be reasonably confident that, at least 2 cuts are in the offing. And if we're wrong, it's more or maybe sooner. So the risks are now to the sort of the dovish side, whereas previously they'd been to the hawkish side.
Luci, Ellis, Chief Economist at Westpac. Thanks for coming on the show.
Thanks very much, Ed. Always great.
The Australian stock market surged to an all-time record high in February, thanks to rising optimism around the Trump presidency and his pro-business outlook. But since then, the market suffered a series of sharp sell-offs due to Trump's tariff policies and retaliation measures from nations like China. Volatility has become the new normal for investors. So, to unpack this all, I'm joined by Junbei Liu, the co-founder of TenCap, and Sebastian Mullins from Schroders Australia. Junbei, I want to start with you. Thanks for your time for both of you. But this volatility has just been crazy to watch over the past few weeks. Every day, with every new shred of news, the market seems to just doesn't know where to go.
Absolutely. It's just been incredible. And in a way, when it was falling, did remind me of COVID when we had the health crisis. But clearly, we don't have any health crisis. We've got Donald Trump here. Because of we don't know what the final outcome, some of the outcome can be binary, markets just find it very difficult to process those information. And at one stage, still is, the market is processing US will be heading for a recession, almost 50% chance. However, if the trade resolve itself, perhaps it's not. So all these binary outcomes making it very, very difficult for the share market to absorb those information, hence why we see the volatility. But remember, for active investors, this is great time because this opportunity is rare to see those great stocks on sale.
Yeah, like one example, Pro Medicus. It was $300 about a month and a half ago. It got to $170, but it's on the way back now.
Look, absolutely. So it really touched the low 2 weeks ago. And what's interesting is the company like Pro Medicus, earnings are impacted by tariff. It's not impacted by any of such, and it's not impacted by potential slowdown in the US consumer, should that affect their confidence and others. So, so the earning hasn't changed. It's just the shares got a whole lot cheaper. And hence why those companies, we actually group them into many buckets, and this is the first bucket of companies where earnings doesn't get impacted, become cheaper. That's where you buy first.
Well, Seb, this week the big news out of the Trump administration was it seems like they're going to back down on putting the 145% tariff on China. We've heard from Trump and from Scott Bessent earlier in the week. I mean, that's clearly going to be good news for market and investors.
It's good news in the short run, because if you think about all the negativity priced in on Liberation Day, where he went to the full extreme of what tariffs could be, plus retaliation of China, as you mentioned, to 145%. That took the average tariff from what was expected to be between 8 to 10% to 30%. Now he's been walking that back slowly but surely, now down to around 20%. We'll see what deals get made. But as Junbei mentioned, the market's anticipating a recession. If there is a deal, the question is how long does it take to actually form that deal? Normally it takes 1 to 2 years to do a proper trade deal. The longer you have uncertainty, I'm not suggesting it's going to take that long, but the longer you have uncertainty, the more likely you're going to have a recession you didn't have to have. Because corporates hate the unknown. They hate not knowing where the trade policy is going to be. You can't do capital expenditure if you don't know where to invest your money. You're going to have a hiring freeze. You don't know how many people you're going to need. If you're a consumer, you're going to pull back on spending. So the longer there's an ambiguity, the longer there's uncertainty, the more likely consumption, both from corporates and from households, starts to decline, causing the recession they didn't have to have.
So what sort of investment strategies do you take at a time like now where just no one really knows what to do?
Well, I think going into this, I think we had a discussion earlier in the year, the market went first to pricing all the positives of a Trump presidency. Deregulation, tax cuts, that's pro-growth. Now everyone shifted to the negatives, what we call the protections policies. Tariffs, immigration, that's pro-inflation, which you don't want to have. So right now you're stuck in this zone where you have growth slowing in the US, potentially inflation rising, which might cause the Fed not being able to cut rates as aggressively as they would need to if the economy was slowing down. So for us, it's been, and for many market participants, it's been rotating away from the US to other markets. Places like Europe have been doing quite well, even China, surprisingly, despite being the eye of the trade war. Very, very cheap valuations relative to the US. So it's been a stay away from the US in the short term, build cash, build positions in certain bonds in certain countries, and even gold's been a very good diversifier in this very short period of volatility.
Yeah, Junbei, the gold price, all-time record highs just earlier this week. I mean,
that's right.
Does that sector still have more to go? Is there more of a run there for the gold? Or
Look, I think, first of all, any portfolio should have a bit of gold as a diversification. It's just good to have. However, our view is that given the volatility and given the low we've seen 2 weeks ago in the market, you can see the equity market stop reacting to the quantum, how big the tariff is. It is still wanting a deal, but it's yet to stop responding responding to all of that. So we do have confidence that, the market will pull through this period. However, if it pulls much longer, then it creates a bit more recessionary environment. So with this sort of environment, we think the deal is getting somewhat closer, or any sort of deal. It doesn't have to be US and China. It could be US and Europe, could be US and Canada, other markets. So the likelihood for those deals to get done is getting higher compared to the likelihood of anything worse to come through. So net, we think that's actually pro-market. Tactically, things actually looking a little bit more positive than it was before. That's negative for gold, given how far it's gone. And especially if you look at the gold equities, they've done incredibly well so far this year. Some of them's gone up 60% in the last few months when the market's tanking. So that becomes a funding source. People will sell those stock down. Yesterday we've seen it, or last few days we've seen it. The gold equities has been sold off in the double digits. They can come back very, very quickly. So I will be a bit more cautious with gold. I'll be taking some profit. Still with the larger gold miner is okay, but it just at this stage it's probably looking more skewed to the other side. I'll be picking up some of the company that's been sold off.
Yeah, one of the things was the reciprocal tariffs came in and then they were paused for 90 days. So we've kind of got this looming deadline coming up within the next 3 months where tariffs could come back into place again. But do you think the way Trump's been playing it, it seems more like the tariffs are a bargaining chip, and the idea is, as Junbei says, to end up making a deal with various countries around the world?
Well, that's what everyone hopes, and that's what he's assuming he wants to do. But even Japan recently came back from the meeting with Trump saying they don't even know what they want. So it's hard to have a deal if you actually have some categories of what you want to actually achieve with them. Now, Japan and US don't have a trade deal. Europe and US don't have a trade deal. They seem like easy partners to create one. So they'll probably be the first cab off the rank. Obviously, Trump has some issues with Europe when it comes to buying oil and gas off Russia, not the US, not spending enough on military. So you can see some wins there. But I think the issue is there's 90 days. If that comes to fruition and nothing's been done, the market might reassess what's going on. And the fact that everyone assumed Trump would have a plan coming into this, I think Liberation Day shocked everyone that it wasn't this long thought out plan. It was getting into a room with Peter Navarro and hashing something out in 24 hours. The reciprocality of the tariffs were completely different to what the market expected. And it's very hard to reduce that if he's focusing on the trade differential between countries. Like Madagascar was very hardly hit. They export vanilla. The GDP is $500 US.
Yeah, they're a big vanilla producer, aren't they?
Well, exactly.
Yeah, they're a big vanilla producer.
There they are, and the US loves vanilla. It's in the Coke, it's in everything. But it's a very poor country, so they can't go buy Boeing 747s off the US to adjust that trade imbalance. So if Trump has some certainty over where the trade deals are going to go, signs a few deals, that'll be positive for the markets. Positioning in the markets is completely washed out. Based on different metrics, it was about 2 standard deviations long, now it's about 2 standard deviations short. So there's a chance for a tactical rally as people reinvest on positive news. But as I mentioned, the longer it takes to actually hash out deals, the more uncertainty there is, the more likely corporate's going to pull back from spending, and that's detrimental to the economy.
Yeah, and just in general, your clients, like how are they feeling? Are they confident? Are they ready to invest money, or are they sitting back going, let's just hold up for a bit?
Well, our clients, thankfully, and they invest with us, and part of our process is drawdown management. So we're a very safe pair of hands. We don't sell off as much as the market. So they're pretty happy to be invested in an active manager doing those things for them. But I think for them, the main question is, when do they want to go more heavily back into equities? I don't think they're there yet. They're still waiting to see how this sort of plans out. But the big question is where to invest your money in equities. Now, Junbei can talk about the stocks and talk about Australia and other countries, but the US has been the main overweight for everyone everywhere. So we're not saying US uninvestable, obviously not. But if everyone had 5-10% overweights and they bring that down to say just a 5 or 0% overweight, that's a lot of money being repatriated back. So the US has appreciated a low risk premium or high PE ratio because it was the only place to invest. Now that's under question. So you're seeing the equity markets suffer compared to other countries, also the dollar fall compared to other countries, and also the bonds selling off compared to other countries. So really it has been a sell America, buy everything else, which is the complete reversal of the past 10 years.
Massive reversal, because in the intro we talked about the ASX was at record highs just a couple of months ago.
Absolutely.
Now it's come back, but it seems like our market is still faring a lot better than the US markets right now.
Absolutely. Look, we're somewhat insulated. Even with that 10% he talked to in 3 months coming through, it's still very, very minor impact. And some of our companies, of course, that's directly impacted will be hurt, but it's very, very select few. So, our economy is reasonably protected as well. Look, where our interest rate cut just started, we had one one in February, one coming in May, potentially a few more coming later this year. China, look, if China gets into big trouble, big recessionary pressure, then it will create a problem for us because it is our biggest trading partner. But at this stage, China is actually doing quite well. And things are, it's consumer doing better, it's corporate doing better, even the housing stock getting worse. So, of course, with this negotiation, it creates a different outcome. But at this stage, Australia actually, looking pretty good at this point. Now, of course, we're going into election period, so we will have a little bit of soft patch going into it. For some reason, people don't like to spend. Corporates hold back on everything. Advertisers, don't want to advertise because there's so much political voice out there. They don't want to be drowned out. So, activity will slow down leading into the election, but post that, we do think our activity is doing pretty well. Our domestically focused businesses should do pretty strongly this year.
Jun Bailu from TenCap, Sebastian Mullins from Schroders Australia. Thanks for joining us.
Thank you very much.
Thank you.
Well, coming up after the break, we'll speak to the CEO of Aussie rare earths company Australian Strategic Materials about our place in the global rare earths supply chain. Plus, Ross Greenwood does a deep dive on our competitiveness with competition expert Charles Kiefel. Welcome back. China dominates the world's rare earths market, producing about 90% of the specialist minerals required to manufacture things like computer chips, wind turbines, and defence systems. Australia's attempting to shore up its rare earth supply chain, with the Albanese government pledging $1.2 billion to create a critical mineral reserve if re-elected. So what will this mean for our mining sector? Rowena Smith is the CEO of rare earths company ASM, and she joins me now. Rowena, thanks for your time. First up, why do you think this policy is so important for our supply chain and for Australia's sovereignty here?
Well, we've got a wonderful endowment here in Australia of critical minerals, particularly rare earths, but we have very little that are currently in production. And the process of getting them into production requires them to be funded. And what we have seen as we've been going through that process of funding projects like our project in Dubbo in New South Wales is that the market is really looking for more than just funding support. They want to see that there is certainty around offtakes and that there is pricing stability. And I think one of the opportunities with this critical minerals strategic reserve is that the Albanese government, if they are re-elected, are saying they'll look to put in national offtakes and a strategic stockpile that I think will address those two components that underpin then being able to get funding.
Yeah, so if they do put in place these offtake agreements where they'll agree to acquire certain volumes of critical minerals from commercial projects, I mean, how's that going to assist you? That's going to help you with your bottom line, surely.
Oh, absolutely. When we're talking to funders, we've had a lot of support already from the export credit agencies from various different jurisdictions, the Australian government, the US, the Canadian government. But, quite rightly, the governments don't want to completely fund these projects. And when we start talking to private investors, be they strategic investors or financial investors, they really are wanting to see that these projects have got secure returns going forward. And because this is an emerging market, there's so much uncertainty there at the moment about what the pricing environment is going to be and, what these offtakes could look like. For the government to be offering this sort of security around, well, we'll give you a long-term offtake as a way of getting this kick-started, that then really does reduce the risk for private investors to then come in and put their equity into these projects.
Yeah, and just explain how big a player China is in the rare earths market and where we stack up here in Australia compared to them.
Well, the 60% of the raw materials are dominated by China production at the moment, but where it really becomes squeezed is once you have got it to a concentrate, even if you're doing that in Australia or, elsewhere in the world, at the moment, it really has to go into China to be processed into an oxide and then into a metal and then into an alloy and then into a magnet. And from that oxide through to magnet, that part of the supply chain is over 90% in China at the moment. The Australian Strategic Materials would be one of, I think, only 2 or maybe 3 others globally outside of China that have got an established metallisation facility. We've got that already established in Korea, but it is a very unique capability, and predominantly at the moment, metal goes into China for processing, and then, they have a choice about whether or not it comes out as an intermediate to be able to support manufacturing elsewhere, or whether or not they retain it in their own supply chain to take it all the way to finished product.
Yes, so you have the ability in South Korea to process rare earths, but just talk to us about the project you're developing in New South Wales in Dubbo.
Well, we're excited about this because it's one that is really at the point where it's shovel ready, and we have got both light rare earths and heavy rare earths in that resource there in Dubbo, and it will be a multi-generation project. So we're at the point now where we're talking to funding. We've got over $1.5 billion of Export Credit Agency support already for that project, and we're at the point where we're doing final engineering and talking to off-takers and talking to investors to be able to take final investment decision. And we're also looking at the moment at what we can do to optimise the flow sheet to be able to more rapidly get that rare earth part of the circuit up and going, which, again, is a sort of an exciting development for us. So what we're planning for is for Dubbo to be producing those oxides, the rare earth oxides, by 2028.
Rowena Smith, Chief Executive of ASM, thanks for coming on the show.
Thanks very much, Ed.
Last year, the IMD Competitiveness Yearbook placed Australia as the 13th most competitive nation on Earth. That's out of 67 countries. It's Australia's highest rating in 13 years, but it does remain below our ranking between 2002 and 2011. Now, where Australia drags in the criteria are in business efficiency. We rank 22nd. In entrepreneurship, we're 61st. And in workplace productivity, we're 48th out of 67 nations. Where we do best are on environmental agreements, in university education, and in life expectancy. Charles Kiefel is the chairman of Principal Funds Management and is a lifelong advocate for greater national competitiveness. He was the federal government's representative on the trustee board for the Global Federation of Competitiveness Councils. Now he's the global body's vice chair, and he spoke to Ross Greenwood a little earlier.
Well, there's different types of competitiveness. If you're looking at the corporate tax rates, which you've covered very well, and I applaud you on that, by the way, on your show, the Australian corporate tax rate is 30%, and Singapore is 17%, the United States 21%. So it begs the question, why doesn't Australia become more competitive and maybe drop the rate to 15%?
So I'll ask you that. That would seem to me to go back to politicians who don't want to be seen.
I'm not a politician.
No, I understand that, but they don't want to be seen to be giving business.
Well, I'm putting it out there. It's a challenge that we should strive to do better.
Right. So I get that, to strive to be better. And if we were to bring down our corporate tax rate, many people would say, the government won't collect as much tax. Is that real or not, do you think?
No, because it'll attract more investment, which means more tax, more jobs.
OK. Now, you've given advice to a lot of investment managers over the years and others who have raised funds and capital.
Yeah.
They employ that capital.
Yes.
What I hear from the chief executive of, let's go through some of them. BHP, if I go to Orica, if I go to BlueScope, if I go to Brickworks, if I go to James Hardie, if I go to ResMed, they're raising capital in Australia. Sending it straight to America.
Well, it's all about competition by comparison. For example, gas. Look at gas. I mean, Australia's got probably more gas than most countries, which it has. We've got enough gas for 1,000 years in Victoria if they unlock the gas. So that's an area where we can become more productive. So you've got lots of people at the golf course the other day, and somebody said to me, well, why don't we use all the natural resources that we have to the benefit of Australian people? And that's two areas. One is gas, and the other one is uranium. We've got uranium. We've got a third of the world's supply of uranium. Why don't we use that to the benefit of Australian people? We could either sell the uranium, or we could build a nuclear powerhouse in Australia using using uranium. So there's gas, there's uranium, and then there's precious earth metals. Why not package up all three and do a deal with President Trump's administration, because they're looking at doing deals globally, aren't they? That's competitive.
Business cannot operate when they've got a corporate tax rate of 30%.
That's right.
When they've got an industrial relations system that holds them back. When they've got energy prices which are higher than overseas, because you compare like with like around the world, capital is mobile, it picks itself up and moves somewhere else.
That is why you need benchmarking. So you need ongoing monitoring, setting a benchmark, a base case, and that's what the US Council has done. They've set a benchmark as a yardstick to compare their competitive position. In 1985, when President Reagan set up the US Council, that's what they did. They set a benchmark, and after that, they monitored their improvement.
So that would be a fairly simple and cost-effective thing, even for our government to do.
Correct.
To say, OK, where does Australia sit on a competitiveness basis?
Yes.
And not to have bogus sort of things that we're pretty easily going to win.
Exactly right.
To challenge the hard issues.
You've got to have a transparent competitiveness index, and you can measure, and already are people who do that. There are a number of indices that you could do, but I think that would be a good idea, Ross.
OK, so Charles, if you were setting up a business right now and you had a growth business that required energy, required people, required some capital to be put into that, is Australia the natural place to put that business?
Not at the moment, because we discussed earlier, our tax rate's too high. And if it was 15%, wouldn't you be more attractive if you're a foreigner to invest in Australia at a lower tax rate?
Well, 100% you would be. So then there's a second thing about our personal tax rates, which are also up towards 47%.
Well, they're too high as well.
But then if you'd bring them down, what the government would be accused of doing, or the coalition, whomever it might be, would be they'd be rewarding the wealthy.
Yeah.
Where is that actually, is that good or bad politics?
No, it's not good. Ross, I've just come from Greece. Did you know when the democracy of Greece was formed? 510 BC. In 510 BC, the first democracy, you know what the tax rate was back then? I did some research with a guide. It was 33%. Now, what's our tax in Australia? What you've got GST,
that's right,
like 10% plus. You've got a personal tax rate for the high level at 49. You've got stamp duty, payroll tax, land tax, more taxes, other taxes. How many taxes do we want? So in all those years, 2,000 years plus, we have hurt ourselves. What are we doing to ourselves? Why don't we become more competitive and strive as a nation to reduce our taxes? We're very good at sport, so why can't we do it with capital?
OK, so then you go to the Global Federation of Competitiveness Councils. Now, my understanding is that the government used to fund this.
Yes, the coalition did, yes.
The coalition funded this.
Yes.
What happened to that funding?
Well, I did present this to Minister Huzik, the industry minister, and it puzzled me as to why he didn't want to do a call with the president of the US Council, to which we had an alliance. And remember, this is a global leadership group of corporate leaders. It's a very powerful group, corporate leaders and university laboratories. And it's been very successful in the United States. But they decided not to do a Zoom call. They decided not to do a telephone call. Disappointed me. We sent letters, and it puzzled me as to why they didn't do that. And I decided that it was in the best interest of Australia to continue, and I've continued to fund that. But other people have supported the journey, and they're very happy.
So hang on, you're funding the government's, what the government previously was paying for, you're now funding yourself, simply so Australia can stay in this competitiveness council.
Well, it's community service, Ross.
I get that. I understand that, Charles. So, but there's a passion there, clearly, that you have.
It is, yes.
To try and make Australia more competitive.
But I've seen it firsthand. Yes. I've been involved since 2013, and they made me a distinguished fellow in 2016, and I went on the board representing Australia in 2017, and I believe in it. And we got backers like Lockheed Martin and Bank of America, Shell, John Deere. There's 40 university laboratories in the United States, and we got a gathering of 20 leaders from the United States coming to Australia, delegates from the US Council coming to Australia in July, and we'll gather a number of Australian leaders they'll be invited, and hopefully they'll join us in that program.
So, OK, so one thing about this competitiveness and talking about where Australia sits in this competitiveness ranking, I'm not sure the ordinary person has been travelling recently across Southeast Asia, but the increase in wealth that people are seeing there, the improvement in the standard of living of people across, shows you that competitiveness is real. And in many ways, many of those countries are really eating our lunch right now.
Well, they're your words, Ross.
Well, I've just said it.
We can do better. I'm very proud of my country and countrymen. We're very well-educated, capable people, very adaptable people, and I think Australia are a very kind race of people, but we are competitive and we are aspirational if we're given the right framework to do it.
So what your sense is that the very good first step would be to benchmark where we sit on a genuine competitiveness scale.
But yes, also join these bodies to share best practice with other corporate leaders. You've got nothing to lose. There's an old saying, fortune favours the brave. Nothing ventured, nothing gained.
So, Charles Kiefel, good to have you on the program today.
Thank you,
Many
Ross.
thanks for your time.
Thank you.
After the break, small businesses are seeking solutions for cash flow and greater brand visibility. How CBA is helping its customers. Next. Welcome back. With market volatility at unprecedented levels and talks of tariffs potentially pushing up inflation, it's no wonder that small businesses in Australia are feeling uncertain about the future. Despite that, many are still hoping to invest back into their operations, with social media and marketing a top priority. Steph Nash reports.
The outlook ahead for small business just got a whole lot more complicated.
I think that the tariffs, there are some cases where they're a little beyond reciprocal because, we've been abused for a long time as a country.
On Jerome Powell, you said that the termination of Jerome Powell cannot come fast enough. He says he won't leave it even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there.
The IMF this week downgraded its forecast for global growth, slashing it down from 3.3% to now just 2.8% this year. For Australia, annual output will be $13 billion lower this year than originally predicted, down from 2.1% to a meagre 1.6%. That less than rosy outlook strikes a chord with small business owners who are already battling a cost of doing business crisis.
Look, the IMF report does match up with the lived experience of small businesses. We know it's an uncertain time. But why are we, as an Australian economy, making our life more difficult? So things like red tape, things like industrial relations, things like being one of the least competitive tax destinations in the world, these are all things we can control.
Look, small business owners at the moment are obviously reflective on the challenges ahead and a little concerned about what's to come. We're hearing that on the ground. We're also seeing that in our research. So we know the rising cost of doing business and other concerns are on their mind.
So what do small businesses want? From this election, it's all about achieving a competitive advantage.
Less complexity, more simplicity, and a fair go, really giving small businesses the chance to spend less time on paperwork and more time on their core operations to actually employ, train and grow their business.
We've got an instant asset write-off that we're extending at $20,000. We've also got a series of other tax breaks. We've got the build-to-rent tax breaks that Angus doesn't support. We've got the production tax incentives, which Angus doesn't support. There are a range of ways that we are providing tax relief, tax incentives to businesses small and big in our economy.
We will make the instant asset write-off permanent because we don't want to see shenanigans every year as it goes through the parliament.
Election checklist aside, CBA's Beck Warren says small businesses are generally looking for smarter ways to improve cash flow and create greater brand awareness.
Well, businesses often face little lulls in their cash flow, and if they really look ahead at some of the moments that are coming up, we've got Easter, school holidays, end of financial year, Mother's Day. We see these can be peak spending periods in consumers, and for small businesses, they can help bridge their cash flow if they just find a little bit of time to invest in a marketing and sales strategy to optimise those moments can really help small businesses navigate these times.
Laura Sharp, owner of tourism business Sydney by Kayak, knows the day-to-day struggle of running a small business all too well.
I remember one day writing out coffee orders for a sunrise tour whilst I was having contractions with my now 4-year-old, and then a storm was coming and we had to cancel the tour, and so I'm getting further into my labour and having to call customers to move them and reschedule them. But you just do what you have to do as a family-run business.
Like many business owners, Laura knows the value of good marketing. It's why she and her husband entered the Commonwealth Bank's Matildas on Loan competition, a campaign by the bank to support 50 local businesses by offering them a share of a national advertising campaign. Inspired, of course, by the ladies in green and gold, the CBA-backed Matildas.
Running a small business is incredibly tough, and small businesses wear multiple hats on any given day. So we look, sometimes obviously we put solutions together for their banking, but we really try to strive beyond that as well. We launched Matilda's on Loan program as we saw that many Australian small businesses were looking to invest in marketing this year, in fact 40% of them. So to give them a helping hand, we thought we'd put together a billboard campaign to promote them through a national program, really fueling their business and their presence to support small business.
It's one of a number of initiatives designed to give its small business customers a leg up, such as the Yellow program.
So it has rewards and discounts for uniforms, marketing costs, software costs, hardware, other ways that can help their business. We've also just partnered with the University of New South Wales for cash flow costs, whether you're a CommBank customer or any small business. As we know, managing cash flow is really critical, so partnering to put together content free of charge.
Meanwhile, as one of the winners of the Matildas Loan competition, Laura Sharp is hoping to make a splash with her brand new CBA-sponsored billboard.
So being one of the winners, they posted our brand on billboards in Sydney so that we would be featured alongside the Matildas with our brand colours and our logo, which is incredible brand awareness across Sydney, and also on the radio. So we had quite a number of people message us on Instagram saying, I just heard you guys on the radio, was that you? And we're like, it was very exciting. It helps us immensely. I always believe in consistent drip-fed marketing, and over the past 12 years we have done a lot of different types of marketing, and this one blew us away. Obviously Commonwealth Bank and the Matildas are very well-known brands, and to be featured alongside them was just huge for us. We're obviously quite a small operation, and yeah, it was just amazing.
For Laura, it puts her one step further towards her goal of expanding her harbourside operation.
Well, we have got some really exciting things coming in the year ahead. So Sydney by Kayak, as I said, has been operating out of beautiful Lavender Bay for 12 years. And out of that time, we have been operating out of the back of our beautiful kayak van. But we are actually opening an eco hub. So our first sort of brick and mortar shop. So the eco hub is a step further.
That's all for the show this Sunday. Up next is all the latest news right here on Sky News. Business Weekend returns next Sunday, but don't forget, you can keep up with all the latest business news with our daily program, Business Now at 4:30 p.m. Eastern Standard Time. Thanks for your company. I'm Edward Boyd. We'll see you next week.